Financing real estate in Dubai. In this lesson, we'll tackle one of the biggest challenges for investors: financing your property purchase in Dubai. Many aspiring investors, especially expats, find the mortgage process in Dubai confusing and intimidating. The rules, eligibility criteria, and down payment requirements can be a major hurdle. On top of that, there are differences in what banks offer to GCC nationals versus expats, and regulations can change quickly, leaving buyers unsure about their options. But here is the good news: Dubai's mortgage market is mature with a wide range of banks offering competitive products. If you understand the rules and prepare properly, you can secure financing, leverage your investment, and even qualify for long term residency visas. Getting this right can be the key to unlocking profitable real estate opportunities in one of the world's most dynamic market. So let's bring down the process of financing a property in Dubai, focusing on the differences between GCC nationals and expats, the main mortgage rules, and a practical case study. Mortgage options: GCC national versus expats. GCC nationals can borrow up to 80 to 85% of the property's value for their first home, up to 5 million dirhams, and 70 to 75% for more expensive properties or subsequent purchases. Expats, on the other hand, can borrow up to 75 to 80% of the property's value for their first home and 60 to 70% for more expensive or additional properties. Off plan properties, maximum loan to value is 50% for both groups. So LTV is loan to value. Interest rates and loan terms. Typical interest rates ranges from 3% to 5% for residents and maybe 1 to 1.5% higher for non-residents. Maximum loan tenure is 25 years. Age limit at loan maturity is 65 for expats and 70 for nationals. Eligibility criteria: minimum monthly income of 15,000 dirhams for salaried expats, higher for self-employed, stable employment often with probation completed, and satisfactory credit history. Down payment is 20 to 25% for expats and 15 to 20% for nationals. Some of the key ratios to consider would be, I know I'm going too technical into mathematical, but this is important: debt service coverage ratio. Now measures if rental income covers mortgage payments. Lenders prefer DSCR is greater than 1.25. Debt to income ratio: mortgage payments cannot exceed 50% of your monthly income. Total outlay: it includes down payment, fees approximately 7 to 8% of property value, and monthly repayments. A quick case study here could be financing a 2-bedroom apartment in Dubai Marina. Let's say the property price is 2.5 million. Down payment for expats is 5 million. So that's 20%. Sorry, 500,000 dirhams. The loan amount is 2 millions. Interest rate is 4% fixed for 3 years. Monthly payment estimate is 10,560 dirhams. DSCR calculation would be assuming monthly rental of dirhams 13,000. DSCR would be 13,000 divided by 10560. That is 1.23, which is acceptable for most of the banks. Assume net monthly income 25,000 dirhams. DTI calculation would be that DTI is debt to income ratio. So assuming net monthly income is 25,000 dirhams, DTI would be 10,560 is the expense divided by 25,000, that is 0.42%. 42% is within the 50% limit. Total outlay: down payment is 500,000. Fees is approximately 7%, that comes to 175,000. Total upfront is 675,000 dirhams. So that's a complete entire picture of you buying a 2-bedroom apartment in Dubai Arena for 2.5 million. Moving on to Checklist for expats securing a mortgage in Dubai. Check eligibility, minimum salary, age, and employment status. Choose mortgage type, fixed or variable. Get pre approval. Approach banks or mortgage brokers for pre approval. Prepare documents, passport, visa, Emirates ID, salary certificate, bank statement, proof of address, and credit report. Select property. Ensure it's approved by your lender. Sign sales agreement. Pay reservation deposit. Final loan approval. Bank performs property valuation and final checks. Transfer ownership. Pay down payment and fees. Sign mortgage contract and register property. Financing real estate in Dubai is highly achievable for both GCC nationals and expats. And if you understand the rules and prepare your finances, by leveraging the right mortgage, you can maximize your investment potential and even open doors to UAE residency.